All right, let's get right into it. Today we're looking at a market that is just wound up like a spring. Bitcoin is stuck in this super tense standoff, and it's created a total pressure cooker of fear and opportunity. So the big question on everyone's mind is, what's next? Are we about to see a massive crash, or is this the perfect setup for a huge rebound? Let's break it all down.
Okay, so this is the number at the center of everything, $95,600. For days now, Bitcoin has been practically glued to this price. It's not rallying, it's not crashing, it's just sitting there. And that kind of quiet is honestly pretty unnerving. It usually means a huge move is coming, but the million-dollar question is, which way is it going to break? And this is the number that's got everyone spooked. A staggering $870 million has flowed out of Bitcoin ETFs. Now, these funds are the main on-ramp for big institutional money, so when you see the big players pulling that much cash out, well, it sends a really powerful and scary signal to the rest of the market.
Now, if you really want to get a feel for the mood in the market, this is it. The Fear and Greed Index is at a 10. That's not just nervous, that is extreme fear. We're talking widespread panic. And here's the tricky part. Historically, this can be a massive buy signal, be greedy when others are fearful. But it could also mean the floor is about to completely collapse. And that's the razor's edge we're on right now.
So, here's our game plan for today. First, we're going to dig into this 95K standoff. Then, we'll look at the big money, contrasting the ETF outflows with what the whale wallets are doing. After that, we'll get into the whole ETF approval mess, check out some regulatory wildcards, and finally, weigh the two biggest possibilities. Are we looking at a moonshot or a meltdown?
All right, let's start right there on the battlefield. This 95K level isn't just some random number anymore. It's become a huge psychological line in the sand. And what's wild is that both the bulls and the bears have really strong data to back up their case. The signals are pointing in completely opposite directions.
And you can see the divide perfectly here. The bears, they're pointing at those huge ETF outflows, the fact that trading volume is drying up, and just this general feeling of weakness across the board. But the bulls, they're looking at what's happening on the blockchain itself, saying, hey, big players are buying. Plus, all the classic technical charts are screaming that it's oversold. It is a total tug of war.
So let's really dig into that, because this is where things get fascinating. We have two powerful and totally conflicting signals about where the smart money is really going. Are we supposed to follow the institutions selling ETFs, or the giant whale wallets that are quietly buying up the GIP? So here's the case for the bears. Bitcoin's dominance is up, which sounds good, but in this context, it's what we call a flight to safety. People are scared, so they're dumping their riskier altcoins and running to the relative safety of Bitcoin. That's not confidence, that's fear. And you can see it everywhere else too. The total market cap is down, trading volume is down, the market is just losing steam.
Here is the massive counter-argument. While retail and the institutions are selling, look at what the biggest wallets are doing. We're talking about wallets holding 1,000 Bitcoin or more. They're not selling, they are buying. Their holdings are up 12%. These are the experienced players who see all this fear as a huge buying opportunity, and they're just scooping up coins from everyone who's panic selling.
And to add even more fuel to the bull's fire, look at the Relative Strength Index, or RSI. All you need to know is this. Anytime this number goes below 30, it's considered oversold. Right now, it's sitting at 25. For technical traders, this is a classic signal that the selling has just gone way too far, and a bounce could be coming very soon. Okay, let's zoom out from the charts for a minute, because a huge piece of this puzzle has nothing to do with trading and everything to do with Washington, D.C. All the uncertainty around new ETF approvals is just casting this giant shadow over the entire market, making it impossible to see a clear path forward.
I mean, just look at this timeline. It shows you how frustrating this all is. The original deadline for approving new ETFs for major coins like XRP and Solana was way back in October. They missed it. Then an SEC shutdown just stopped everything in its tracks. Now everyone's hoping for a new deadline in December. This endless wait-and-see game is just killing any kind of positive momentum. And it is so important to remember that crypto isn't just about Bitcoin. There are so many other things going on, other coins, other news that are creating these really complex crosscurrents and affecting the whole system. So real quick, before this next chart, you need to know what a layer 2 is. Think of it as a super fast express lane built on top of a main blockchain like Ethereum. Its whole purpose is to make transactions way, way faster and cheaper.
It's a huge piece of crypto's future, and it's key to understanding what's coming next. And here's why that matters. While Bitcoin has basically been flat, just look at what's happening in other corners of the market. StarkNet, a big Layer 2 project, is up an incredible 35%. Zcash, a privacy coin, has shot up 40%. This shows a clear rotation of money. People aren't necessarily leaving crypto, they're just moving their cash out of Bitcoin and into these other sectors they think have more immediate potential. The broader market is just a chaotic mix. On one hand, you've got good news, like new institutional products launching and some progress on stablecoin rules. But then you have all the speculative frenzy around meme coins, and you've got yet another multi-million-dollar hack raising security concerns. It is a very messy environment right now.
Okay, so let's bring it all home. With all this conflicting data, all this chaos, where does that leave us? Let's lay out two very, very different futures for Bitcoin, depending on which of these forces wins out.
Here are the two paths. The bull scenario, the moonshot, gets triggered by some good news. Let's say the XRP ETF finally gets approved in December. That could unlock billions in new cash and send the whole market flying. The bear scenario, the meltdown, is that the delays in Washington just drag on. Maybe we get some bad economic news, and that sends Bitcoin tumbling down to that crucial $90,000 support level. Now, if the bulls are right and we get that positive ETF news, some analysts think we could see a surge not just to previous highs, but all the way up to a new target of $120,000. That's the explosive upside everyone is holding out for. But if the bears are right and the gridlock continues while the economy gets weaker, the downside is pretty serious. The price could slice right through that 90K support, and some analysts are saying we could even see a drop towards $85,000 if real panic sets in. So now that we've laid it all out, the question is for you. Based on everything you've just seen, where do you think Bitcoin is headed by the end of December? Are you expecting a big rebound? Do you think it just stays stuck where it is? Or are you bracing for a slide below 90K? Let us know. So to wrap it all up, here are the main things to remember. First, you've got this huge fight between institutions selling through ETFs and the big whales buying everything up. Second, the biggest wildcard by far is the regulatory mess around new ETF approvals. Third, even when Bitcoin is shaky, there are pockets of strength, like the money rotating into Layer 2s like StarkNet. And finally, and this is the most important part, none of this is financial advice. The crypto market is wild and volatile, so please always do your own research.